Today, I got the three biggest Bitcoin stories you need to know. $389 million just walked out of Bitcoin ETFs in a single week. And if you bought a SafePal wallet in the past year, your name, your address, and your phone number might be already in the hacker's hands. It's Monday, August 17. Bitcoin is sitting around 64,000 and is frozen in place. Today, I'm breaking down exactly why smart money is heading out for the exit, who's at risk right now, and why Harbor just made a move that could tell us where this market goes next. Let's get into it. For our first story, the 13 US listed spot Bitcoin ETF bled 389.7 million last week, their biggest weekly drain since late June, completely reversing the 853.5 million that flooded in from that week before. Bitcoin itself barely moved, stayed inside at a tight 2% range and trading around 63.400 as this morning. Why it matters: three things are keeping buyers on the sidelines. First, interest rates uncertainty. Even though traders now only price a 30.6% chance of a September rate hike, down from 55% a few weeks ago. That hasn't been enough to spark a fresh demand. Second, the Clarity Act, the US crypto market structural bill everyone's waiting on, is stuck with no progress. And that legislative limbo is keeping bigger institutional buyers cautious. Third, volatility itself is usually low, with Bitcoin's implied volatility index at 37, below its yearly average, meaning there's just not much reason for traders to jump in right now either way. Okay, let's get into the second story. Binance backed wallet maker SafePal disclosed that a flaw in its order of tracking plug-in exposed personal data for roughly 40,000 customers. Customers who place orders between March 2025 and April 2026. Leaked information on includes names, emails, addresses, shipping addresses, phone numbers, and purchase details. SafePal says the breach did not expose seed phrases, private keys, or wallets, and it's found no evidence that any wallet funds were actually taken. The company says it identified and it took down more than 30 fraudulent phishing sites tied to the leak. This is exactly the kind of data that fuels the phishing and impersonation scams we have talked about before, where attackers pose as company support, offer a free firmware update or replacement devices, and trick people into heading over the real credentials. It's also worth noticing that SafePal apparently sat down on customers' complaints since early July before pinning down the root cause. A reminder to be skeptical of any unsolicited messages claiming to be from a wallet provider, even weeks or months after a breach like this. Let's get into our last story. Harbor Endowment held steady around 3,044,612 shares of BlackRock's IBIT worth around 101 million through the second quarter of 2026. Its first quarter without a cut after two straight quarters of aggressive selling. It trimmed 21% in quarter 4 2025 and another 43% in quarter 1 2026. Harbor also fully exited its Ethereum ETF position, which had been worth 86.8 million. For context on how it's prioritizing, Bitcoin now ranks 11 out of 19 disclosed positions, just 2.4% of Harbor's 4.26 million portfolio, smaller than its combined gold holding at 171.2 million and the worth by its 2.21 billion SpaceX stake. Why it matters: Harbor isn't buying more Bitcoin, but it's not dumping it either. And after 2 quarters of heavily selling, that pause is itself the signal. It suggests that endowments sees current levels as defiantly rather than bargain, but also not a reason to exit entirely. When one of the most closely watched institutional allocators in the world goes from aggressive seller to a neutral holder, it tells you something about where big money thinks the risk reward sits right now. So here's where we stand. Bitcoin's frozen near 63,400, and with ETFs money heading out the door, a wallet breach has 40,000 people's phishing alerts, and Harvard just went from seller to sideline. What to watch out for next? Wednesday federal minutes and whether the Clarity Act finally gets voted. Those are today's biggest Bitcoin stories. I'll see you tomorrow.